What should be spending you a lot of time is this one, because you need to analyze what they have asked you, as you have done already. So they're asking you depreciation. What is depreciation? Oh my God. Am I saying 460? Calculate depreciation rate on cost? Because it's they giving us cost, and then I say it's the answer. No. Remember, let's go back. So always in your mind, what you need to do is just to say, okay, I have my old assets, I have my new assets, that is new vehicles, and I have my sold assets. For all these, you must calculate depreciation, and you must learn how to calculate depreciation for this. So, meaning that when I'm saying old, I mean, let me go to my timeline. I mean assets that will always here at the beginning of the year and up to this period. So let's make a good common sense and assumption. In vehicles, any information of an asset being sold, the answer is no. So no assets sold, meaning that all these 460 assets that we see here, they are still here at the end. We can discuss it as to why I'm saying that. So we're going to take all the assets that we have, 460,000. 460,000. Right? That's a cost. So they're saying that isn't what? Is it cost? 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 15% and cost. And agree with me. The assets were in this business for 12 months. So there's no prorator that we're going to need. So we're going to say is equal to 12 over 12. Is it 1? Okay? Prorator. Then how much is the depreciation rate? Is 15%. Okay? It's not diminishing. That means that it's not diminishing. That means you're gonna say cost minus accumulated depreciation. Keep it like that. Keep those principles to your head. Then what's the answer? Then the answer is equal to cost multiplied by rate 12 over 12 multiplied by 15%. Agree with me? That's what? That's your depreciation. Then you open your eyes and you're like, no, 69 is the correct answer, mathematical. But I remember here they said I must calculate carrying value. That you have to depreciation for. Can a depreciation exceed carrying value? No. That means that this carrying value, this depreciation should be limited to, guys, this thing was going to beat you. If you were in the exam, it should be limited to the carrying value. You can't depreciate over carrying value. Remember, this is depreciation and there's a carrying value. So you can't depreciate assets too, because after this you're gonna have to minus to the carrying value. It's gonna be a negative. So that means that depreciated to the carrying value. So the carrying value of this asset is 3,650. That means that the asset that depreciated to 0. Then your answer should be this one. That's your depreciation. That they depreciated. But assets must depreciate to a point whereby it remains at 1 rand value. Then we need to reduce this thing by 1 rand, because that's what's going to be remaining. Then that's your depreciation value. So meaning that now the carrying value, the assets at this stage, at year end, is 1 rand. Is 1 rand. Explain this concept to you. If you consult and come to me, I will explain why I'm saying this thing. But it's 1 rand. So that means that the depreciation must be limited to what is the carrying value at the beginning of the year. Because at the beginning of the year, they opened with 3,250. Now, when you continue depreciation on cost, it gives you something that is more than that. That doesn't make sense for me. You can't depreciate something more than the carrying value. Then that means that it must be limited. We'll see from the solution. But then again, you can't depreciate the asset to 0. It must be depreciated up to 1 rand. Then that's why I'm removing 1 rand. So this is going to be depreciation that you're going to be putting here. Guys, I understand. This is a trick. This is a trick. This is a trick. This is a trick. Let's see if I'm right or what. New asset. Remember, there's a new asset that has been purchased in the current year on this date. That means that this asset was not here from the 1st of March. So we can't calculate the depreciation for those months. We need to calculate from the date of purchase, as I said here, up to the year end. Because we didn't sell it anytime during that period. We just purchased it up until the end. So now we need to be interested about how many months did this vehicle stay in this company. Then let's calculate the months. November, 1st November. Was purchased on the 1st of November. November, December, January, February. Oh, 4 months. Oh my God, 4 months. Okay. 4 months. Oh, they just purchased an asset and they use it for 4 months in that period. Okay. Well, I wanted to put in brackets, but it doesn't want. Okay, let me see. 4 or 12. Okay, wait. Non-specific. 4. Excel. Shire Excel. Excel. Yeah, 4/12. Yeah? Okay. Yeah, let's go. Analyze. So the depreciation is calculated on cost, but now we calculated depreciation on a new asset. Where is the cost of a new asset? We're not given in this information. Let's go to the table. Oh, additions. That's where they put the cost of an asset that is new. 510. Wow, that is expensive. 510,000. Okay, 110,000 is expensive. Then okay, 110,000. How many? What did this asset stay in our business? Let's say for 4 months. 4 months. 4 divided by 12. Always prorate. It's fine. It's not putting this, but it's 4/12 like this. Then 15%. Keep for all assets, for all vehicles. We use one. Then now let's get what's the answer. So we say cost multiply by 4/12 multiply by 15% is equal to at least. Now this one you can't limit to anything because it still have the depreciation is still like way less than the cost. Then it's fine. And then we don't limit to anything. We'll bring it up thing here. Then let's put our depreciation here. And then we say the total depreciation for us is number 2 is going to be this sum. Drag it down, bring it, then that's our answer. That's your total amount that you're going to be putting into that space, guys. Very important for you to know this, please. If you are confused or maybe I'm making a mistake or you want to discuss, you have your 15 minutes for this question, for this video. You have 15 minutes to discuss with me only for this question. Come, let's engage. As long as you watch the video and now you have a question, come and engage with me. I'll book you time, give you a chance, we talk about it, and then you're fine. Number 3,